Welcome back to Market on Close. Let's go to the Nasdaq and talk about how the melt up in small businesses might have other small businesses feeling. Joining us, Mike Sokoll, AVP of Account Management for the Market Intelligence Desk at Nasdaq. Mike, market's already been in pretty good shape. You guys have had a pretty busy year for IPOs. I wonder if maybe this can throw some gasoline onto the fire with all the small caps finally ramping up.
Yeah, I think we'll take that first. I mean, small caps, as you pointed out, probably on other parts of your show repeatedly, they've had an epic 5-day rally. It's probably the best maybe in the history of the Russell 2000. And heading into today, the 4-day rally was one of the 14th best since '79. So we're there. Pretty much all the gains for the year have taken place over the last 5 days. And I think all of that is driven by, of course, it was led by the CPI number, but it was all driven by the idea that, maybe this higher for longer regime is going to end a little bit. Maybe get 2 to 3 rate cuts, the first being in September, and all of that is super helpful for the small caps, which, as we know, have been vastly underperforming. The S&P 500's hit, 37 record highs, and the Russell, even with the move, is 10% below its highs hit back in November of 21. So yeah, this could be a helpful environment for small caps. Just in terms of your IPOs, you're absolutely right. We've had 167 deals. Last year, in 2023, and this year, just through Friday, we've had 104 deals raising just over $20 billion against $23.4 billion for all of last year. So we're actually running ahead of pace. I don't think you're ever going to see in a while anyway years like 21 or 22, but we're really coming back to a pretty healthy IPO market. And even CEO of Goldman, David Solomon, had said on his call he thinks we're in the early innings of some of this. So combine that with the small cap rally, and it's looking better.
How does your guys' data, and I love the reference to Goldman, I was literally just thinking about the bank earnings as you were talking there on IPOs. What is your guys' data, and what is the conversations that you're having, how do they line up with that comment from Goldman about maybe it just warming up?
Yeah, a couple interesting points there. So we published our June IPO Pulse not too long ago, and it's at 3-year highs. So, it begs the question, like, okay, where are all the deals? And I think the main thing is about private equity exits, and do you get some of those companies coming off the sidelines now wanting to come public? And David Solomon did, in fact, reference that, too, in his earnings call, saying that he thought that was the case, that was beginning, and we might see more of that. So I think that ties into the data. An interesting data point, too, on our Pulse is that, although we don't publish this, it's based on a lot of internals having to do with the S&P 500. So I asked them to have a look at what would you do if you looked at the S&P 500 equal weight so that you're not focused on just 7, outperforming companies or so. And the numbers look just about the same. So I think the Pulse is signaling positive things. So is the industry based on some of the bank earnings that we saw last Friday. And now, of course, with the potential rate changes and what small caps are doing, I think it all is pointing pretty bullishly.
Okay. How do the CEOs typically think of these companies? Do they see something like this and they go, okay, the door just opened, this is great, I want to get in while it's open? Or is the idea, if this is going to be heating up, I wait a little bit, I get an even better price? Because some of these companies in the small cap world, they're trading. They went from some of them being their credit and some of the stocks too, priced like they're going out of business as of a couple of weeks ago. And now they're trading like they've got another shot at life.
Yeah, I hear what you're saying. So, we've had such a fast rally that that moves so quickly that, for an IPO, you got to gear up and do a lot of things to get public. So the environment has to stay stable for a little bit. But along those lines, if you're talking about just offerings or things like that, and a company stock price reacts very positively, that's more on the table now in terms of doing financings. And then the IPOs are going to come and flow from that. But I think also with the lower rate environment, if it comes to pass, a lot of the private equity deals that maybe were on the sidelines could also come out. So you get, a mixture of companies there. Incidentally, on that point, we have just under 200 companies in our pipeline, and the pipeline's been strong for a while. But it's not just all tech companies. There's 40 or so tech companies, but there's 39 consumer companies. There's 24 healthcare companies. There's a decent number of SPACs. So it's a pretty diverse pipeline.
All right. Great insight, Mike. Thanks for sharing it with us. Really appreciate that.
Thank you, Oliver.
Good eyes on the market from Mike Sokoll.